Just a little bit about me. I'm a Florida native. I was actually born in Miami. I moved to Jacksonville in 2000. I was still with a firm, the insurance company that I've been with since 1987. So I got a degree in insurance in '86. Started working for this firm in '87. I'm not going to say the name, but yeah, rhymes with snake harm. And really good experience. You know, they taught me a lot. I did a lot of catastrophe work. They taught me everything I needed to be a good public adjuster. And I don't work for them anymore, but they still pay a lot of my bills. So that's kind of cool.
All right.
This is how public adjuster firms operate and grow. I'm Mark Goldwich. I own a public adjusting firm in Jacksonville, Florida, Gold Star Adjusters. Started in 2004, just me. And I was here last year. How many of y'all were here last year? Anybody? Randolph, one. Okay, well that's good, because I did something similar last year, and Cal asked me back again this year, mainly because he knows I'm open about talking about my public adjusting firm and how I run the firm, and maybe giving more details than what maybe some other firm owners would give. So the idea here is just to have more of a discussion and not just me read the words and say what we do, but maybe we hear about what your firms do, what other firms maybe you've worked with before. Everybody here public adjuster? Anybody here not public adjuster? Independent? Okay. So that's the idea, is to generate some discussion, not for me to stand up here and say this is how it's done right, because it works differently for different people in different areas. So it's kind of subjective, really. Just a little bit about me. I'm a Florida native. I was actually born in Miami. I moved to Jacksonville in 2000. I was still with a firm, the insurance company that I've been with since 1987. So I got a degree in insurance in '86. Started working for this firm in '87. I'm not going to say the name, but yeah, rhymes with snake harm. And really good experience. You know, they taught me a lot. I did a lot of catastrophe work. They taught me everything I needed to be a good public adjuster. And I don't work for them anymore, but they still pay a lot of my bills. So that's kind of cool. And in the years that I've been adjusting, I put on over 24 public adjusters. They don't all stick around, as you know, but I just started my firm on my own, like a lot of public adjusters did back then. There's more firms now who are bringing on lots of PAs. Back then, it was a little more rare. You had some really large firms that had a number of public adjusters, but most PAs were sole practitioners, and they wanted to stay that way. When I got to Jacksonville and opened my firm and started bringing on some folks to help me adjust claims, because I could only handle so many in a year on my own, and after a while I needed help, so I would bring on people. Well, when I got to Jacksonville in 2004, there were really like 3 other PAs in the whole area. And there's about 1 million people in Jacksonville, so we were really underserved. The other public adjusters would go, "What are you doing bringing on competition?" And that was their mentality, was why would you bring people into this industry? One day they might be competing against us. And I just didn't really give that much consideration. I felt with my experience, yeah, if they went and worked somewhere else, if they did leave and compete, one, there's enough claims out there for us all to handle. And then two, if we're really being compared, if someone's looking at them and looking at me, I'm hoping they're going to pick me instead of them because of my experience, because of what I've done. And then part of what I've done is kind of like what Steve Patrick said this morning. A year into being a public adjuster, I was just telling stories to somebody, and she told me, you should write a book about this public adjusting thing. I've never heard of it. So I did. I wrote a book. And it really does help with credibility and authority. And then years later, I wrote another book. So I've got 2 books that I've written, and it does help. I've had people say, you know, I interviewed you, I interviewed somebody else, and I went with you because you wrote this book. So there is truth to that. And, you know, obviously, I try to network a lot, member of a number of associations, try to get out there on social media and at least get some recognition that way as far as the work that we do, and whether it's me or somebody else, another PA firm, to have people get some professional help rather than go it alone. Anyway, as I said, there's lots of different ways that you can approach the PA firm. I'm going to share what I do. Obviously, there are others that do things completely differently, and that's fine. It doesn't have to. There's not just one way to do it. It's as diverse as the personalities, right? And so hopefully along the way we'll get some participation from y'all and get some other ideas of what's being done in other places, what you see work, what you see that doesn't work, and really what doesn't work for that firm may work for another firm. So, you know, I kind of started with mission and vision statements just to kind of set the tone, and even when it was just me, I had that. And of course, it's going to help when you have others that are working with you, and of course, you always have to choose a path that suits your personality. I say my piece, they say their piece, I do what I'm going to do, and the claim gets paid eventually, right? Not personal. They do this to everybody. So I don't take it personal. I don't want them to take it personal when it goes to appraisal, mediation, attorney, whatever it is. And that's a lot of times on the other side, they get a little, as you know, they get a little upset when you're not happy, when you don't just accept their number. Okay, well, you didn't accept my number either, so we're all good. You know, obviously, you want to have some core values that you work at with your firm. Personally, I look at Gold Star as more of a mutual company than a stock company. I'm not really looking at maximizing short-term profits. I'm looking more long-term and slower growth. There was a firm that opened up in Jacksonville not too long ago. I mean, they popped up with like a dozen adjusters out of nowhere. I don't think they still have those numbers there, but I'm not positive. I don't really hear about them. But, you know, that's kind of fast, I think. So I'm trying to go slower, long-term. I want to grow more organically. I know it can be done faster. I know there are ways to do it so that the company can earn a higher profit. But again, that's not my style. I think systems are really important, and I think systems should be in writing, kind of like goals. And I've given you some ideas of the systems that we use. And again, I try to create what I call workflows. Somebody else may call it something else. I call them workflows, and we try to do kind of a step-by-step guide on how to do things. But again, it's a guide. It's not a mandate. All the folks that work for me, as we'll get into, they're all 1099 adjusters. So from operating to recruiting to onboarding to training, I have written guides for these things. Even disengaging and marketing, we try to put as much as we can in writing. So for a couple of reasons, so that we can kind of follow it, whether it's me or somebody else. And there's always the possibility, that I get hit by a bus one day or fall off a roof, and someone else has got to take over, right? So now these systems are all in place, they're all in writing. It's a lot easier for somebody to pick this up and they can modify it as they go, but they're not starting completely from scratch, if that makes sense. So that's why I like to have a lot of stuff in writing. Again, my philosophy is that public adjusters are 1099 independent contractors. They're not W-2 employees, although another firm can do it completely the opposite and have all of their PAs be W-2s. Folks out here, any W-2s in here? You're all 1099s?
Yep.
Okay. I guess I'll take that as a yeah from everybody. So, which is, again, either way is fine, but I know there are some firms that have W-2 employees. And sometimes there's good reasons for that, and it works for them. Cool. My adjusters are encouraged to incorporate, right? Not take money in their own name. Set their own hours, make their own decisions. To do all of these things on their own, I'm really just giving them a platform and a place to work. I liken it to real estate brokerages or real estate firms. There's a lot of parallels between real estate and public adjusting. So, and I was a realtor at one point. And so that's kind of how I model the firm, so that my adjusters can make as much as they want, as little as they want. I'm providing them a place, I'm providing them some support, and we all get together as a group on a regular basis so that they can learn. They have the opportunities to come to conferences like this and learn. And if they choose not to, that's okay. I don't require them to come to something like this. I let them know it's available, and sometimes I'll incentivize it as well. They all handle claims from start to finish, right? So we don't silo adjusters. Other firms do. Again, that's fine if they do. I choose not to. I want my adjusters to be well-rounded and to be able to handle all aspects of the claim, not just sales, or not just Xactimate, or not just contents. I want them to know all of the bits. Again, some others would say, well, then that way, but they can then really compete against you better if they know the whole process, rather than if you just feed them a little piece of the process, that's the only piece they know, and it makes it harder for them then to go out somewhere else. Obviously, they can still do that piece for another firm, so I don't really even buy that.
It sounds like you're saying a silo is the equivalent to a conveyor belt. Like, boom, I do this part, then it goes
right.
down. Okay.
Right, like an assembly line. Yeah. And again, it can work. There are some folks that they just want to do sales, right? They just want to sign. They want to find the deal, sign the deal, but they don't want to estimate it. They don't want to negotiate it, and they don't want to fool around with the check or the back office work or those kind of things, right? They just want to do their piece, and that's again, that's fine. And then there are some firms that just want them to do that one piece and not the other pieces. They'll put the pieces all together and do it that way. Again, it's just a personal preference thing. So that's my deal on silos. For the folks here, everybody handle all aspects of the claim, or anybody do a single piece?
All aspects.
Okay.
Unfortunately.
Was that unfortunately? Well, sometimes, yeah. There's always an upside and a downside to everything, right? When I talk to folks who are doing pieces, they're getting 10% or 20% or something like that for their piece. Of course, I always think, well, wouldn't it be better to get 60, 70% of everything than 10%? And someone would say, well, no, because once I'm done with my 10%, I'm done, and I just go on to the next one. Again, personal preference. So my goal is to attract quality, independent public adjusters and retain them long term. I want them to be entrepreneurial to a point, right? Or that's kind of like the goal. If they're entrepreneurial, they want to learn the job. They want to learn how to do it well, but they don't want to be micromanaged, right? They just want to be kind of left alone to do what they do and what they know how to do, which is cool because that's what I want to do. I don't want to have to micromanage 15, 20, 30, one day, 100, 1,000 adjusters. I don't want to have to do that. Can't do that. Not enough time for that. So I want them to be independent, but there are some people who, they're always going to start their own firm. That's just how they are. That's how they're built, and that's how they're wired. Obviously, that doesn't work. That wouldn't work great for me, because then they're gonna leave, and I want them to stay. So the person that's really a good fit for me is that entrepreneurial to a point, right? And then, just a little bit of why. Obviously, a public adjuster who's given up 50% to the firm, they kind of can figure out that it might be worth it to go somewhere else. If all I'm ever going to get here at this firm is 50%, maybe I should just go on my own and get 100%. And yes, I'm going to have to hire somebody to help me with the back office stuff, or yes, I'm going to have to now pay for whether it's the CRN or Xactimate even, or whatever it is, office space, but they can work out of their home. So, but they can go, wow, there's 50% out there. Easy for me to see why it might be better for me to go somewhere else or on my own. But if they're only giving up about 25%, then they start to think, well, yeah, I could go out on my own, but now I have to start paying for all these other things and do things that take time being money. That's going to eat up my 25% or something pretty close to it. Better for me to stay here long term. I still get to kind of do my own thing, and they do. So I think that's the difference. But I still find there are public adjusters in firms that are making 50, 55%, and they're perfectly happy with the situation. Maybe they get a lot of leads. Obviously, that's worth a lot. Maybe they get more support or different kinds of support. That's fine. But that's what I find. So, there's some loyalty there. Whether they get the leads, they're just comfortable staying. They don't want to make a move and go out on their own. So they stay where they're at. Again, as long as they're happy, that's good.
I have a question on that. Do you bill your 1099 PA separately if you provide the lead versus if they're going out and doing their own work?
I don't.
I don't either. I was just curious.
That'll be in there somewhere. But no, it's the same. So personally, we do have some support. We have an admin. We have 24/7 answer. We use Claim Wizard. Our admin is always a notary so that they can notarize things. That helps. And they take care of checks being endorsed and fees being collected and things like that. There's limited. But a lot of my adjusters, they do all that themselves because they want to do it when they want to do it, not when the admin is able to do it. And they have that relationship with the client, and that's the way they prefer to do it, but it's available to them. And we have one support for 12, 13 PAs. It's mainly for the office. The way we do it, we feel the public adjusters make enough that if they want to hire their own support, they can do that. And I have an adjuster who's had 2 assistants just helping him work claims. So he runs his company out of my company. He actually rents a couple of rooms out of my office space. And he has his own assistant where he doesn't really use the office assistant. So he's running his firm, again, kind of like a real estate brokerage. He's the real estate team within the big real estate firm, right? So that's just how he does it. And it works for us. This guy, he's more than capable to go out on his own and work on his own. He prefers not to. He likes the situation that he has. We've been together for about 10 years. And again, it works good for both of us. So what we do is we charge PAs a nominal $100 a month. We call it an admin fee, right? And it covers some of these overhead costs that we have in the office and in the admin's time and things like that. And again, that's a carryover from the real estate world. It's done a lot in real estate offices. And obviously it's not a lot of money, but it just there's a little incentive there for them to make money to cover that fee, especially when they're first starting out. You know, in the end, it doesn't really matter that much. And it's just an offset for the office expenses. All right, the way we do it, our fee splits start at 55% for either apprentices, which is a Florida-only thing, or for brand new adjusters with no experience, may start them at 55%. But generally, 60% for a fully licensed public adjuster, even with little experience, and we go up to 75%. But it's based on set revenue benchmarks that are written out in the contract that they sign with the firm. Anybody have something like that they use? Or is it just,
What are the benchmarks?
here's the percentage? It's based on dollars, revenue, total revenue. I don't have it in my head, but it's doable.
55 and it goes to 75.
Well, no, he means the dollar, the revenue dollars. So I think the revenue dollars to get to 75% might be about $500,000.
Or aggregate over the time they've been with you?
No, in a year.
Y'all doing good.
In a year, yeah.
Yeah, I mean, like the first benchmark
But
is usually 55,000, the second one is 75,000.
Okay,
And so on and so forth.
yeah. So first one, $55,000 in revenue to the company. That's not their share. That's the total revenue to the company on the fees. You add up all of those, and once they hit $55,000 in fees to the company, it may move from 55% to 57.5%, whatever. And we go kind of in 2.5% increments. Right.
So I started when they were apprentices, well, I don't have apprentices in my state, but I started them off at 50% because I did all the training, I did everything, so it was 50%. But the guys that actually stuck around, I got them up to 70%, but I've maxed them out at 70%, having to keep sturdy. It's somewhere in the Cal fee schedule, actually.
Right. I started out, I don't know if it's there, it may come up somewhere, or if we already passed it. I started out I had no clue, right? I'm bringing people on if they had an interest, they wanted to come on. And I would start them at 75%. After a year, I moved them to 80%. I know, right? That was a long time ago. That was a long time ago. In my little head, and this is when I was working out of my house. So I didn't have an office. I didn't have an admin. I'm thinking, if I can get 5 people, and I'm getting 20% from each of these 5 people, well, 5 people, that adds up to 5 times 20 is 100. That's going to be like, I can maybe replace my income if I just got 5 people and got 20% from each of them. At one point, I had like 13 adjusters, and I wasn't making as much money as I was making on my own. So, that didn't work. And so I've scaled it back, but I'm still a little aggressive as far as generosity maybe, where I cap at 75% rather than 70%. I know 70% is kind of common, or 65% maybe kind of common too.
Right. I bumped them up. I went to 50, and then I went to 60, and then eventually I got them to 70. So, but I didn't
Right.
do the increments like you were doing.
Yeah.
And that's a little less.
I just do 60 if I give it to them, 70 if they bring it in.
Okay. Yeah. Again, I'm not about simple all the time. I probably should be. A lot of my stuff is somewhat convoluted, but I think I try to make it fair, right? That's what's in my head. And I'm not worrying. I don't really worry enough about how much extra work it makes for me. I just try to do what I think is right and fair. And again, the people who like that and appreciate it stay long term, and the people who don't go somewhere else. And we all live. So it's okay. But yeah, I like the idea of having it spelled out in contract, because I get people who contact me thinking about becoming a public adjuster or thinking about maybe working for a different firm, and a lot of times it's because they're stuck at a low percentage and they're not happy with. I had a guy once years ago. He would make 20%. That was his split, was 20%, and he was telling me he was bringing in $500,000 a year in business to the firm. And I think he said, well, I get about $100,000 a year, so I'm happy. He's like, I don't care that the owner gets $400,000 a year, and I don't really see him very often, because I'm happy with what I'm making, so I don't begrudge him for what he's making. And I was like, dude, that's okay if you like that, but we could turn the tables around with you working with me. We can just flip that around, because I'd be okay making the $100,000, and I wouldn't begrudge you for making 4 times what I'm making. He's like, well, but they all do all my estimates, they do my contents. I said, okay, I can show you how you can afford, when you're making $400,000, to pay for someone else to do that. What do you want to do? So he ended up working with me for a little while, but he was one of these guys that then he figured it out. He goes, I don't understand why I'm giving you 20%. I'm doing all this myself. I said, I understand that. That's fair. I told you that when we first started. That I also told him, whether you work with me or you work on your own. If you want to work on your own, I'll help you. I'll help show you how to work on your own, rather than to see you get 20%, and that's it. So I said, do whichever you want. I'll help you go on your own, or you can work with me and we'll flip it around. And then he ended up saying, I don't understand why I'm giving you 20%. You're not really doing anything. I said, I'm doing everything I told you I would do, and everything that you asked of me, I'm doing. But so that was somebody who just, whatever. Our visions didn't match up anymore. So he goes and I go, and we're all okay. Again, so no difference in the split, in the fee split, regardless of who procures the claim. We do give office leads out. We don't charge extra for it. But again, they're not gonna live off of the fees, off of the claims that we give them, because we don't do really aggressive marketing. We don't put a lot of money into marketing. The way I've always done it is when I bring on a new adjuster, they find their own sources. And it's always worked. Every time I brought on somebody new, they find their own sources. So they're not going to live off of our leads, but they're going to make good money. And with the money they make, they can pay for their own leads. We do payroll by direct deposit every other week. It's probably pretty common. We pay them once the check is received in the office, once the fee check is received in the office. Even if even hasn't yet been deposited, we still run our pay and direct deposit them the money. And then for newer adjusters who are below their 75% cap, we do incentivize for larger losses. We're finding a way to pay them a little bit more, even though they're not, or because they're not at the cap, right? So if they handle large losses, there's an extra incentive or like a bonus. Same for if they're working claims out of the area, because we want to incentivize them to go work a storm. And usually there are no storms in Jacksonville, Florida. It just doesn't seem to happen. We're waiting, and it's not happening. So, if they have to go to Pensacola, or if they have to go to Miami or Naples or somewhere else to find storm work, we want them to do that, and they're going to be out of their home. They probably have to be, spending for hotels. So we give them an extra bump for working those claims.
So, in your experience, do you find it better to get people with an IA background to be able to work a claim, or do you find it better since they've got to go, basically eat what they kill? Do you find it better to get somebody with a contracting background that probably knows other contractors, et cetera, that way they already have a warm market, if you will, to go tap into?
Yeah, we've done both, and we've done okay with both. I had an IA. He was an IA after he was a contractor, and now he's working with me, and he's doing really well, because obviously he knows construction, and then he knows the IA side of it, and every claim you're dealing with an IA, so he knows their talk. So he's doing extremely well, but I've had some IAs who didn't do so well. Now they weren't contractors before they were IAs, and then I've had carrier side adjusters work with me. Some of them did fairly well, and there was actually one who he just couldn't do it, and he admitted he drank way too much. He couldn't handle it.
The ones that couldn't do it, what kind of experience did they have?
Really good. This guy was retiring from Allstate, but he just couldn't manage trying to suggest that the insurance company wasn't paying all that they were supposed to pay. It just wasn't wired. It wasn't computing with him. That's right. That's right. Yes. He was.
See, from an IA perspective, from an IA standpoint, I'm doing this 20-some years as an IA, and when I was a couple years as a staff, we sit there and look at it, and me and the guy on the end down here, because he's also done IA with me for a while, you sit there and you look at it and go, how could you not? I mean, you look at the firms, the carriers, and go, how can you shortchange them? How can you not pay for this? How can you not pay for that? But it's,
They find a way, right?
welcome to the PA world. Not there yet.
You're close enough.
I've got a contract in hand, so the firm's up for sale, so I am doing this.
You're within reach.
It's been an eye-opener, and I've held
Yeah, yeah.
PAs for many years, you know, and all my IAs, I've got 40-something guys that work for me in different states, and it's you see all that stuff come across your hands, and it's mind-boggling, you know. So even Cal's, you know, boot camp I went to, it's eye-opening for an IA, I promise you.
It is.
Even for our staff as well. It's
Right.
eye-opener, you know.
And I was staff for,
It's programmed to believe that, you know, guidelines and things like that is actually,
Mhm.
but it's not. You know, the policy's gonna stand every time.
right.
That's right.
I mean, I was staff for 17 years and, you know, thought I was going to retire there and thought I was always doing the right thing. And people, you know, they would yell at me, how do you sleep at night and all this. I sleep fine because I'm doing the right thing.
Yeah.
That's really what I was thinking. I sleep fine because I know I'm doing the right thing. You know, the brainwashing is real. It's not a, you know, we kind of joke about it, but it is real.
I mean, it's to a level where the own carrier, staff adjusters are brainwashed.
Sure.
I mean, you know,
Yeah,
something different, but-
absolutely. All right, we hit everything there. We also, besides large losses out of town, we have what we call a profit share program. If you bring on an adjuster, you're going to get a piece of everything that they make for the firm. It's not coming out of the person you're bringing on, it's coming out of the company. And then if that person brings somebody on, you're always going to get a piece of that as well. It's not a big piece at all, but it adds up. And if somebody gets on, I've got one adjuster, he's got two adjusters under him, right, that he's sponsored, right? One that he sponsored directly and one that person brought on. So he's making off of two other people. Both of them are doing pretty well, which means, you know, the sponsor, the original sponsor, does okay, and sometimes makes more off of the people under him in a pay period than he's making off of himself. But
As long as
part,
somebody wage, you can split 25% though. with
Right.
Your overhead and everything
Right.
else, so you're
Right.
splitting hairs there.
the idea is that we're also always bringing on new people who are not at 75%, but they're at 55%, and then 57.5%, and then 60%, and then 62%. You know what I mean? So it's a more gradual thing. And yes, we're always gonna need to grow, right? To be able to maintain that. And not always. I mean, I don't think it's going to be. Again, remember now, when for the people to get to those higher levels, they got to be bringing in a lot of revenue. So at that point, and they're going to be efficient working on their own. They're not going to need me to hold their hand anymore. So they're doing well, and at that point, you know, you can make it off of 25% or even 20%. I think. Well, for me, that would be okay for me.
Larger pool in Florida too. I provide 100% of the leads for the guys that work for me.
Wow.
Like I said, I've had staff adjusters that just didn't work out, some IAs that didn't work out, but just for the area. But the fact is I mean, even with me providing, and it's more than enough work, I've turned down a lot, but I still have trouble finding PAs or anybody willing to either switch or convert over. So I don't have the luxury of droves of opportunity of people wanting to come work.
Yeah, we don't have droves. We don't have droves, and we do have to. You have to work for it and post for the positions, and you know you want your guys to be net. That's why they get incentive. You know, I want them networking and finding others. Maybe they run across an independent on the road out there somewhere, and they get them to cross over and convert, right? So, yeah, but it is tough, and like I say, you know, the margins do get skinny at that point, but I'm okay with it. And then also, you know, I handle some claims myself, and that always helped, right? But I'm hoping that once I get a certain number of adjusters that it'll work out. And then obviously there are always going to be people coming in, there are always going to be people exiting. All right, we kind of talked about CAL's, the IBN system, and that's what that looks like. Now, and I think they do this more when there's a catastrophe, right? They kind of engage this, and they look for other PAs to help them out, work together to protect the insured, and then this is how they divvy up the pie, right? And so you can see, again, as is kind of common, their front office, their overhead, that's the 30%, right? And that's pretty common. I imagine they also run down in a lot of the check collection, and there's another 5%. So now they're at 35%. And then if they get the leads, then it just adds to that. So, that's how they do it. I'm sure there are other firms that do it that way. And then there are firms that may have this as their own kind of system where, again, they have their adjusters in silos, just handling their one aspect of the claim. And as long as it works for everybody, that's great. Is everybody kind of familiar with this? Have you seen this before? Because I know Cal posts this online. He doesn't worry about that. All right, just some more random things. So we handle all covered losses. We don't have limits. We don't have minimums. We don't avoid difficult carriers. We don't care if it's State Farm or Security First. How many people in Florida? So not a lot. In Florida, State Farm is probably State Farm everywhere. Difficult, right? But we have some carriers that public adjusters really, they avoid them. They won't handle the claim if it's from that carrier. And I just go, hey, send them my way. We'll help them. Sometimes it doesn't really pay off well, but you don't know who this person knows. You don't know what their next claim is going to be. Sometimes it's like a loss leader. You try to help them out the very best you can. Again, part of my philosophy is that we want to try to help we believe every policyholder deserves professional representation, right? Everyone. It doesn't matter their income, their house size, the claim size. I think they all deserve it. So we're going to try to help everybody regardless. Claims that are under $1,000, we just handle them without a fee. Are there a lot of claims under $1,000? No, right? So, but when I tell somebody we have a $1,000 guarantee, if your claim's not $1,000, we're not going to charge you anything. And they go, oh, that's pretty cool. But it doesn't happen. Of course the claim's going to be over $1,000, and we're going to get to collect our fee. Every once in a while, and I can remember 2 of them, these claims were under $1,000. Legitimately. We get them, they're $700, $800, whatever it is, and we don't take a fee. Big deal. Did that claim take almost as long as if it was a $50,000 claim?
Definitely.
Probably, right? So what? They know somebody, they have a friend, they go to church, whatever it is, and the word gets around, right? It's goodwill, right? Karma, whatever you want to call it. But literally one of these 2 cases that I'm remembering, she did refer me to a neighbor down the street who actually had a claim that was over $1,000. So, that's cool. Let's see. And obviously, your newer reps are going to work on smaller claims. And sometimes, it's just to get them experience handling the claims. They can refer claims to each other. They can get a referral fee from each other. They can write estimates for each other. They can appraise claims for each other and agree on, hey, I'm going to be out of town next week. I've got an inspection. Can you go out and meet with the guy? And whether it's what the guy says, yeah, I can do that and not charge anything, or if he wants to charge $200, whatever it is, if they agree on it, It's fine with me. Obviously, they can turn down the office lead. Once they get a little bit of the background, they may say, no, that claim's not for me. Why don't you give that to somebody else? And we'll go around until someone will handle it. And if nobody will, I usually will. I'm not going to force somebody to handle a garbage claim, right? But if I think if it's a valid, legitimate claim, I think they deserve representation. And if I have to do it myself, I'll do it myself. Obviously, but what they can't do is they can't take the lead and then sell it to somebody else in the firm. We don't do that. You don't want the claim, don't take the claim, but don't take the claim and then sell it, wholesale it to somebody else. And then they can co-adjust claims. And sometimes, like a newer person will co-adjust a claim with somebody that has more experience and has a higher split. And we pay at the higher split of the two. And then they can split it however they want to amongst themselves. We do have a non-compete in our contract and a buyout of the non-compete. What do you guys do on non-competes? Do you have them?
I can't have a non-compete in the state.
Okay. How about you? You have a non-compete?
Yeah, I mean, it just says that, they can't start their own firm within 18 months.
Okay.
But they can go to work for another firm if they want to. I
Okay.
don't hold anybody up, but yet I don't want somebody in my backyard that I just train.
Right. and using your material or going on their own and I've had this happen. Adjuster leaves, and a couple of years later, because we had a client who's leaving them, wants to fire them and hire us, they show us the contract that they had with them, and lo and behold, they just changed my company name with their company name, and the contract is the same contract. I mean, they just took my contract and they just, put in their company. That's the kind of thing. I don't mind them competing. I just don't like them stealing my stuff, right? Do your own stuff. So we do have a non-compete where initially I didn't, because I was like, I don't care if you want to go somewhere else, go somewhere else. But then they would take stuff. So I don't like that. So now we have a non-compete, but we also have a buyout of the non-compete. So if they want to compete, they can buy their way out of the non-compete, and then they're completely free to go compete. And some have done that. So again, that's fine, as long as everybody agrees, that's fine. Again, we have the one support. I think it'll be good for up to 15 adjusters, one support. After that, we'll have to get another support person. We have a little office. It's just 1,000 square feet. We have room for about 7-8 adjusters and a receptionist. And some adjusters want to work from the office, and they can, or they work out of their home. We can do, whichever they like. And we do have a conference room, so they can come in and just use the conference room if they want to use the conference room. There's the 5 times 20 doesn't equal 100. Learned that kind of the hard way. And then I know on Facebook there's been a lot of discussions on what should be the maximum. And I think it's kind of common that people have kind of settled on 70. I've just kind of stuck to 75. Maybe one day I'll get down to 70. I don't know. We'll see. But yeah, it's really tough if you're doing a higher split. And then obviously, just hire to grow. I did that early on. Anybody that wanted to come work, I would bring them on, and didn't always work out. So we try to be more careful in hiring adjusters and thinking more long-term rather than just, I want to have a number. At one point I had 17 adjusters Oh, this is great. I had 17 adjusters. That's pretty cool. That's a decent number. Well, 11 of them weren't doing anything. You know, they weren't working at all. They weren't bringing anything in. Now, they weren't costing me. I think this was even before we were paying monthly for a CRN. So whatever, you know, I looked at it as if they're not costing me money, I'm not worried about them being there, right? But now it's a little bit more than that. It's not that I don't want them to cost me money. I want them to be active and working. So they may be getting ready for their next class finally. Anyway, I've used a business coach for most of the 18 going on 18 years that I've been doing this. It helps me. May not be for everybody. I also have a couple of groups that I go to where there are other business owners in other fields, and we hash out issues that we have. That's a good idea if you can find something like that. If you can't find something like that, you can create something like that. So that's another option. Obviously, you need to be careful of expenses, especially on your splits if you're paying healthy splits. We meet monthly, talk about numbers and strategy. That's really good. It's really good. It gets all the adjusters engaged, and I'm not in the field as much as they are. So when this person says, this is what's going on, this is a trend that I'm seeing with this company, this is a trend that I'm seeing with this carrier, it's kind of like a lot of like this conference that we're hearing down. Is it upstairs or downstairs? In the big room. It's a lot of stuff like that. But we do it every month, and the adjusters get to hear from each other what's really going on in the real world. It's very helpful for them. And then just about apprentices in Florida. You have to become an apprentice first unless you were an IA for 6 months. And you have to apprentice for 6 months. Apprentice has to be under fully licensed adjuster. And you can only have one apprentice per adjuster, and then they go and cap the total number of apprentices at a firm is at 4. If you had 20 adjusters, well, by that logic, you should be able to have 20 apprentices, right? If you, a 1-to-1 ratio, which I can understand the 1-to-1 ratio that they want, but then they cap you at 4, regardless of the number of fully licensed adjusters that you have. But that's just kind of what you have to work with. And then we have a state exam. I don't know if all states do. State exam? I got you, bro. Okay. But usually once we get our exam, we can reciprocate with pretty much all states. From Florida, because I think we have one of the tougher exams.
Right, ours is pretty tough too. I haven't had any trouble. I have New Mexico, Colorado, but I can get Texas no problem.
Okay.
Stuff like that, so in surrounding states.
All right. Love to open up for more discussion and more thoughts, feedback on what's going on in your world.
I'm Randolph Love. I'm just joking. But now, what I want to, one thing that because I reached out to you when I first became a public adjuster, and we ended up not linking up, but you still picked up the phone from me all the time, had lunches with me. Of course, I paid for the lunches, but then you started. But then you started actually paying for lunches and stuff and invite me out, even though I wasn't making you any money. What's the reason you did that?
Friendship.
Okay.
Friendship. I like eating lunch, and we're very different. Rand is the entrepreneurial person who's not going to be tied down to a company, right? He's got to work for himself. when I first meet them, I don't know this right off the bat. You know, it takes some getting to know him. And now I realize he's entrepreneurial. You know, he's not going to work for somebody else. He's working for himself, and that's fine. And we don't do everything the same, but I learned from him. Even though I've got more experience, he's got more creativity, and he picks up on things really quickly. You'll find if you get to know him. So yeah, so I learn from you. You learn from me, and we both get lunch.
Okay, there you go.
You know.
Appreciate it.
So that's good. Anybody else?
How has
Thoughts, ideas?
your experience been, I'd say, the past 2 or 3 years finding good adjusters when you're, doing a hiring or anything like that? Or are you always hiring, or do people contact you and want to come work for you? What's your experience been with that?
A little mixed. A lot of times people find me, and of course I prefer that. If they find me, it's a lot easier to close the deal. Just like with a policyholder, if they're calling you and asking you to represent them, it's a lot easier than knocking on their door and explaining why they should be hiring you, right? And normally, in the end of that transaction, they're going to be a better client when it comes to paying the fee if they came and begged you to represent them versus you trying to convince them to sign your contract, right? So it's like that. Right now, I'm actively trying to hire. So I use LinkedIn right now. I've used ZipRecruiter in the past, and what's the other one?
Spell check.
What's that? Indeed, and ZipRecruiter I've used. LinkedIn I'm using right now. I do get some candidates. Most of them, though, they're in other states, and honestly, half of them, they don't know the difference between an IA and a PA, right? A lot of times they're IAs, and the form says, you must be a licensed public adjuster, and you have to check that box to get a response even. Otherwise, you get an auto response that says, "Thanks for applying." And of course, they all check the box that says I'm a licensed public adjuster, right? And half of them aren't licensed public adjusters. Sometimes because they just want to get to the next round, and sometimes because they just don't know the difference. They don't understand what it is. But yeah, I'm always open to it. I prefer it when they come find me. But yeah, I'll go look.
I just was actively trying to hire for what felt like forever. I'd say over a year, and finally decided that I was just going to train someone green, and it's working out for me. But I think it's going to end up being more ideal for my situation than anything else. But
Yeah.
It's tough though, getting a green person, I've had to do the same thing. It's full on training of everything, it's
Yeah.
across the board. So,
It's the
Right.
same way on the ice. I mean, I know I'm in here with a bunch of PAs and I get that, but it's difficult to find good ones that know policy, that know things, that they should know after doing it 5-10 years. But I found just having relationships with the carriers, the staff guys, just go, "Hey man, anybody is looking for a job," and you'd be surprised how quickly word gets around. I mean, Erie Insurance is one of my big clients, and I've got 4 ex-Erie adjusters, but it wasn't as much as me because there was a time lapse before they actually got in touch with me and said, "Hey, I'm leaving Erie. Can you use me?" So I get in touch with Erie and say, "Look, they're best for you guys. Are you okay?" And so if it's good standings, then Erie has no problem. But just got to get creative sometimes.
Yeah.
Not been the best employee is an IA. That's been an IA.
It's been doing it for a while.
For a long time.
Problem is they go work
10,
one storm
15
and-
years, that know what the policy covers.
Right.
These IAs today, they don't have a clue.
We don't get the policy.
They've never been given a policy. They don't know anything about it. You know, all they know is, that looks like hell, okay. That's
Yeah.
all they know, and they don't, but you can find somebody, 10, 15 years, IA, that the wheels are starting to spin. Those are, that's your man.
Yeah.
Or your lady.
And that's kind of my backup. Right now, I'm trying to I'm trying to target fully licensed public adjusters, and I'm going to see what happens, right? That's this year. Probably later this year or next year, I'll widen that to include IAs, because it is a good pool to recruit out of, especially when they're experienced. But even if they're not greatly experienced, you know, it's not rocket science out there for the most part, especially in Florida. And most of what we work are more daily claims, roof claims, water claims, fire claims, and not a ton of commercial, right? So it's not rocket science, and you can always train them, you can always teach them. Obviously, I'm going to create incentives for them to get Xactimate certified, to go to Cal's boot camp, things like that, to get to the point where they get, but you know, not everybody is immediately up to speed, right? And you have to spend the time to help train them and get them there, because a lot of them are going to do really well. My number one had a background in roofing, no background in insurance, and you know, he's killed it for almost 10 years. He does really well, but it's just his personality, it's his drive, it's his ability to retain information and knowledge and things like that. It just happens. It worked. I think that's about it. Unless anyone's got any other questions, there's our info. If you want to connect at some point. Yeah.
It was gonna be a joke, I'm good.
We can all use a joke.
Yeah, and
Yeah.
the timing was off, because it's a question that I've been wanting to know for a while, man.
Okay.
Where do babies come from? I'm just joking. So there's a stork, right?
Thank you, Mark. Appreciate it.
Sure. Thanks.